Hello, my name is Joe Hopkins, Hopkins CPA firm. I do a lot of tax work all over the nation, tax resolution, individual tax preparation, corporate tax preparation. We also do detailed financial planning for those corporations and other high net worth individuals usually. Today, I just want to briefly talk about 1099s and what is the purpose of receiving 1099s. Basically, there's entities out there that pay other people, right? And the companies of the world are obligated, if they pay out payments to corporations and individuals, they must obtain a W-9 form from these individuals. This W-9 form that's filled out by individuals and or corporations identify whether they are subject to receive a 1099 or not. It is very common out there for people to receive 1099s even if they're not obligated to receive them, such as C corporations, S corporations, and other things that have to have banks set up a corporate bank account, right? So in theory, you get a payment from another company, you have an S corporation yourself, you're supposed to have a S corporation bank account where that money goes directly into the business bank account, right? The government's not so worried about catching those people because there's already a bank account set up separately for the business name. It's already tracking that income, so to speak. But the sole proprietors of the world and some of the partnerships out there, they have the ability to deposit money into a personal bank account, right? Schedule C businesses, you're allowed to mix and mingle personal funds with business funds. That's okay. But for the government to know who got these monies out there, these sole proprietors are supposed to be filling out W-9s from most of the people that they get income from, and those companies that send them income are supposed to be sending out 1099s due to be sent out by January 31st of each year to these people. What happens if you don't report the 1099s? Very likely, probably about a year down the road, 18 months down the road, the government goes through their checking procedures and they have a matching procedure for those that don't file enough money. So as an example, somebody reports $45,000 and there was a business that issued a 1099 to that person's EIN number or social security number for $125,000. Well, they obviously didn't report enough income, right? Or if there's other 1099s, maybe there's additional 1099s. Anyway, the government has a matching program, matches up all these revenues that should have been reported. And if you don't report them, not only do you have to report it now, but it's very likely they're going to tack on a 25% under reporting penalty, and plus additional penalties and interest on top of that. So if you get a 1099, don't risk it, don't gamble, don't roll the dice, just report it. But you need to look at your expenses, get all your expenses, reported, that you can reduce that taxable income accordingly. Now, if you're making significant amounts of net income and you are a Schedule C, give me a call. Let's talk about it. There's a possibility we could change your entity structure and save you some taxes, because Google this. Go to Google and Google self-employment tax Schedule C business. What you're going to find is there's a 15.3% self-employment tax on Schedule C businesses. So for every $100,000 of net income that you receive, $15,300 in theory gets sent to the government for your Social Security tax program 30 years down the road, you get maybe what, 10 cents on the dollar. But there's a way, some other loopholes that we can change your entity structure possibly. Not everything's, not every, it's not right for everybody, but there's certainly something that we can talk about. So anyway, give us a call, contact us in the attachment information below. Please like and subscribe and share this channel with other people. Thank you very much. Bye-bye.